but remember, we got Serge Berger that's going to be coming on right now. We got Michael Cow from CNBC that's going to be coming on, Anka Metcalf, John Seville, Maria. We got a bunch of great speakers. If you missed yesterday's presentation, it has been recorded. We will have it posted up on our social media. You can watch them on YouTube. You can watch it on your portal page on Cybertrade University. And once again, you could, we'll have some highlights of them too, so you can see some shorts and everything else. But I'm glad everyone made the opportunity to be here. I know we've been having a hell of a market. I mean, it has been absolutely fabulous. I mean, even though the Dow and the S&P are not doing anything, we got a great run up with the, with the election that happened. Tesla made great runs, Palantir, Bitcoin. I mean, all the AI stocks have done fabulous. So, but the thing is, you got to learn before you could earn. So that's why we like to host these events specifically at this time of the year, because this is a great time of the year to really take the time to learn. And you're going into the slow times of the year. A lot of people are looking more concerned about taking care of their taxes and, clear out to 2024, get ready for 2025 and get ready for the holidays, the Christmas shopping, holiday shopping, whatever you're celebrating. But this is a great time to actually go out there and learn. But with that said, let me introduce our first speaker. And I'm really excited to introduce someone I have known and had the chance to work with, is Serge Berger. He's not just an amazing trader, but he's also one of the smartest and most approachable people in the world of trading. Serge has been in the market since 1998. And over the years, he's done some incredible things. Like he worked at JP Morgan, working on their trading desk, working with stocks, options, futures. He even created his own unique trading system for trading. What really sets Serge apart is the ability to simplify the opticals of trading in the market. He's developed a really cool step-by-step system that takes the confusion out of trading, and he helps people make smart, confident decisions. His passion is teaching, and his goal is to empower traders, and with the strategy that he actually does work, no matter their experience level. So Serge doesn't just teach trading, he helps people build their confidence and their consistency in the markets. I know you're going to get a lot out of it and incredible insights in participating in his tips from him today. So let's give him a big round of applause, my friend and an all-around great guy, Serge Berger.
Good morning, guys. Good morning, Fausto. How you doing?
I'm doing great, Serge. Thank you very much for being here. I know you're overseas. Where are you? Where are you right now? Because you're like all over the place.
I just live between Florida and Zurich, Switzerland. I'm in Zurich right now. Be
Okay.
back in Florida in the new year.
Good. Well, let me know when you're here. And I just came back, and from Florida, and it's where the obviously where to stay nice and warm and enjoy life.
Yeah, that's actually true. I have it on my list to reach out to you probably late this year, like just before the new year, so we can make sure we get together in New York. That'll be fun.
Absolutely. Well, everyone's excited to hear from you, Serge, and thanks for being here.
Thank you so much. Am I okay to get started here?
Yeah,
Okay
absolutely. You can share your screen, and you got up until 10:55. You got 55 minutes.
Yeah, no worries. Excellent. Excellent. Thanks so much. Let me share my screen here. Make sure I'm not, let me see here. I think I can allow this, and just let me know when you can see my screen in just a second. All right. Can you see? I think you can see the right screen now. Yeah, that looks about right.
Nope.
Perfect. All right.
We don't see it.
You don't? Oh,
nope.
Okay. You are sharing. It says I'm sharing a screen. Let me see. Let's see. Multiple. One participant. Oh, maybe you have to go to one participant. Shows a screen.
Oh, there you go. Now you're getting there.
Okay. Let's share something. And here we are. How does that look?
Yeah, there you go.
Love it. All right. Thanks, Fausto.
No problem.
Appreciate it. All right. Well, there the technical difficulties have been overcome. I'm going to start with something that is something we'll probably look back at. That's something interesting. And I'm going to just already excuse myself a little bit for sounding maybe just a slight touch obscene, and not really. But this is something called fart coin. And again, this is just the name of it. I'm not coming with this name to sound obscene. But here's just to give you a little bit of taste of where we are. So fart coin, like, and not making this up, it's a coin. And I don't think it really has anything behind it except that's just an interesting name. So if I would have put $1,000 behind this coin in the beginning of November when it was worth 2 cents, it's now trading at 57 whatever something cents. I would now be sitting on about $27,500. Fart coin. I'm not making this up. What I'd like to do is I'd like the people to earmark this moment. And let's see if this will have, here in mid-December of 24, if this will have been some sort of a tell. When we look back to it, maybe that's 3 months, 6 months, 12 months, and I don't know. But let's just keep this in mind. Okay, I'm going to just leave it at that, and with that, now move on to the more serious part, because I just can't take this very serious. But again, just keep in mind, let's earmark this, that FART coin, $1,000 investment in early November would now be worth $27,500. Okay, so having said that, what we're actually here to talk about is something much more serious than that, because that's mostly entertainment. Although it made money, right? So let's also be honest at the same time. That's clearly something that did work. But it's volatile, and that'll be something that I think a lot of people will wake up to one day. But nevertheless, it is our belief that we are in an environment that is very, very momentum driven. And I would be surprised if lots of you here that are following Fausto's great insights into the markets would not, at least to some extent, agree with. And I'd like to share with you a little bit how we like to track and trade momentum more specifically. Throughout the course of my career, and Fausto alluded to it, I've kind of been exposed to multiple different markets, from the fixed income derivatives on JP Morgan to the trading desks on the prop side to family offices, and even to date, I'm the CIO at an investment advisory firm, as well as having, of course, our educational business here at the Steady Trader. And I've come to respect the fact that we do need to be open-minded to the market's moves. As much as I can tell you that from many aspects, I don't think what markets are doing right now is very rational. I certainly don't want to fight the markets. There's a very different thing there. There's one thing about maybe not agreeing with what the market's doing, and there's a whole other thing, literally leaning against it. And so we don't want to lean against it, but we want to at least understand what's going on so that we, from a risk management perspective, can trade it with at least some foresight. Risk disclaimer, very important. As you probably know, trading and investing carries plenty of risks. So I'm a big proponent of education, making sure that we're all properly educated on the markets. Anything I'm going to talk about here today is going to be purely educational, meaning none of this is meant to be investment or trading advice by any stretch of the imagination. So that's important. And again, I just would caution people never to trade with more money than one can afford to lose. So please be mindful about the risks in the markets. Some people are concerned right now about the markets. Some people are not. What I can tell you is that we are living in a momentum market. Whether we look at the post-momentum market in 2016, past that election, you can see we got momentum coming into the market at that point. That's this little green up arrow you're seeing there. Whether it's past 2020, past the election, we had momentum coming into the market. You're looking at an S&P 500 chart here. And of course, this year, we didn't know which direction it was going to go, but I was sure that we're going to get a momentum signal. And sure enough, we did. In fact, I can quickly share that one with you. And in fact, let me get to it here. You can see we had a momentum buy signal right there just after the election. We had a quick short signal before the election, but I wouldn't have advised anyone to take a short signal before the election. So, but the buy signal since then, that's been working quite well. So momentum is what this market is made of, and we believe that is likely going to continue, albeit in different parts of the market over the course of time. Now, indicators and tools are only as useful as the actual market that we are trading, meaning I think it's a little bit like, I don't know how many of you here play golf, or you do some other thing where you need multiple tools, like cooking requires more than a knife. You typically need other tools as well, but I'm going to go with golf here. As an avid golfer, I can tell you it's difficult to play around a golf somewhat successfully with just a driver in your bag. I'm thinking of the greenside bunker. The driver is not a very good tool for that. And same thing for different markets, right? Different markets require, at least to some extent, a set of tools. I don't think we need 1,000 different tools, but you need a couple different tools to get through the 18 holes that we consider to be the 12-month calendar month of the markets. And so that's important. I think too many times I see people coming in, they say, oh, I've got it all figured out. All I need is this, only to then not do so well and kind of give it back up. Now, as far as momentum is concerned, I'm going to give you my definition of momentum, and I think this is going to be something that I would encourage people to maybe take some notes on. If you have a phone with you, you can always take a picture of some of these things as well. But momentum in trading is something that I think is going to here to stay. And the reason for that, as I alluded to before, has a lot to do with technology. We believe that the markets have, to some extent, changed over the past 10 to 15 years as algorithms are increasingly a part of the market. Some of the statistics, and I'm sure that Fausto knows these stats very well, but large part of trading these days and the New York Stock Exchange and really around the world, 80, 90%, depends, the day and the market you're looking at, is really algorithmically driven. And so these machines, to a good degree, not only, but to a good degree, they're essentially chasing momentum. Now, right now, and for the past X years, we've seen this momentum largely in tech stocks. We see things like Palantir, we see things like NVIDIA, just, literally hockey sticking from the lower left to the upper right. But that momentum can evaporate and go into other parts of the market. Maybe energy stocks, which happens to be some of our favorites as we look towards 2025 and maybe 5-10 years in the future. So it'll be very important to be respectful of momentum, but open-minded enough to respect that this momentum may not only be in the set of stocks or the set of futures that have worked for the past number of 5, 10, almost 15 years. And so momentum, if we look at it through the lens of physics, and I'm no physicist, I'm certainly not an engineer, but just to give you a little bit of an idea, essentially, mathematically speaking, momentum is kind of looked at as P, which is momentum, is essentially the product of M times V, so mass times velocity. So now we've got this part out of the way. The reason I'm bringing this up, and I'm not expecting anyone to even really care about this, but about this formula, the reason why I'm bringing it up is because my definition as it relates to the market is maybe a touch different. So for anyone here that is, very technically focused in the sense of maybe, engineer background or something like that, you might not see, you might see this a bit differently, but I'm trying to go through my definition of momentum in the market. So the way I look at it in the markets, I'm trying to give you sort of a simple chart here, or I guess an image is probably the better way of putting it. My definition of momentum as it relates to the markets is I'm imagining a car that's driving down the road at 45 miles an hour and then pulling onto, the highway and speeding up from 45 miles an hour up to 75 miles an hour. It's that change. It's that delta, right? That speeding up. That is what I refer to as momentum. Again, there are different definitions out there, but I'm going to show you how we like to take advantage of that. Because the one thing that I can tell you as a directional trader, and many traders are directionally focused, meaning that's different from people who might be out there, looking for income strategies that might be more focused on selling options premium, right, where it's less directional. But we're going to talk about directional strategies here, where we're talking about buying a stock, shorting a stock, buying a call, buying a put, being long futures, being short futures, right? Directional strategies. For the most part, those types of trades, those type of strategies are looking for momentum. And if we can find out where momentum is happening and when it's happening, we really have a big advantage over many market participants. So as I said before, and this is more sort of in written format, momentum is the way we're looking at it is the rate of acceleration of a security's price or volume. And to give you maybe another aspect of this, and I think this is really important, I would encourage everyone to write this down as well. Momentum is fleeting. It's temporary. It doesn't last very long. It can last intraday, hours, of course. On the daily charts, it can last days, weeks, months, but it typically doesn't last all that long because then you're talking about a trend. And I'm going to quickly differentiate between trend and momentum, at least by our definition here on the next slide. But momentum is temporary. It's fleeting, meaning it's not a constant. In other words, it comes and it goes. And so when we look at this chart here, which is a year and a half chart or something like that, or 2-year chart, I think, of a particular stock, we can see the long-term trend. And long-term here, it's all relative, right? This is a year and a half chart. That's for many people not long-term. For some people it is. But it's this long green arrow, the lower left to the upper right, that we here, me, define as the trend. Where momentum comes in is the re-acceleration or the acceleration in the price movement. Again, imagine a car driving along at X miles an hour. Maybe it slows down a little bit, and then it turns onto the highway. It re-accelerates. This is where me as a trader, someone that's directionally exposed in the market, I want to be long stocks. I want to be directionally exposed. I want to be possibly using derivatives. Maybe I want to be long call options. Maybe I want to be long call spreads. Maybe I want to be long options, right? Anything like that. Because that's where, when momentum kicks in, is where we can put on leverage positions. And again, this is educational. I'm not giving recommendations here because it makes sense. A lot of people put on leverage when there's nothing happening, and then they kind of die by 1,000 paper cuts, which is of course not very helpful. So now that we've gone through some of the definitions, let me go through a little bit of the traditional hurdles that we see that lots of the out-of-the-box, sort of straight from the charting platforms or straight from the broker platform types of momentum indicators tend to give to traders and investors. A lot of times we see lagging signals, and they can result in, as you would imagine, late entries, late exits, maybe more false signals than one tends to wish for. Traditionally, indicators, they tend not to adapt as well to market changes, to sudden market changes. So they, again, just another way of saying that they might be lagging. And so what I'm going to show you guys today is something I developed all the way back in my JP Morgan days. And what we were looking at is how can we detect momentum in a more real-time fashion, using some very specific parameters that are extremely repeatable. And so what we end up here with is timely signals that reduce false positives or false signals and allow us to be very adaptable to the market. And so I'm going to show you guys this. We're going to the current market here right now as it is. You guys will see live charts and daily charts and stuff in just a minute. But what we're looking to do here is we're looking to analyze in one sort of algorithm, if you will, in one code, line of code. We're looking to analyze price and volume data to detect momentum. And then it's going to generate buy and sell signals based on these predetermined criteria. Now, again, so you can see, for example, here, this was a buy signal that came in on this particular ticker. And as momentum came into the market, it gave us a buy signal. So The benefits of using something like a more real-time momentum indicator, in our view, is that it increases accuracy by just detecting true momentum. Again, it reduces the false signals, and it's just more adaptable to the markets. And so having said all that, let's go through and go into the market. And if you guys have some tickers you guys would like to put in, I'm going to bring up the chat box here as well. I'll be more than happy to bring those up. I've got a couple tickers ready so we can start looking at this. I'm actually going to start with something that's literally happening right here, right now, so you guys can see I'm not making stuff up. I don't know if you guys have noticed that gold is having a bit of a day today on the downside. So I thought I would start off with that one. This here is a live chart of gold futures. It's a 5-minute chart. And what we're looking at is a momentum signal that triggered a little bit earlier this morning, where as momentum came into the market on the downside, it started to trend lower, and you can see the momentum increased. So from having kind of flatlined, the momentum started to increase. So it started becoming a faster market, right? You can see that it's faster, and then it became even faster after that. Now, in the case of this particular example, it already reached our free profit target there. We like to actually get into trades and then get to what we call a free trade as quickly as possible. Basically, what that means is that we like to get into markets and then have it reach a free target where we then take half the position off. So we got a sell signal. We reached our free profit target. We had a trailing stop. That's these red dotted lines. And now we're essentially trailing this with this purple line here. That's the one that we're now using to trail this lower. So if I would have gotten in and, shorted some gold futures this morning, this is now sitting on a 1.5% profit. And I don't know how many guys ever look at gold, but 1.5% move in gold futures intraday is actually quite sizable, right? So that's just as it relates to that right here, right now in gold. But just moving on to even something like as straightforward as the S&P 500, I'd like to just walk you through what a purely momentum-focused approach would have resulted on literally just the S&P 500 over the past, I don't know, let's just go back maybe like 12, 13 months. And so I'll walk you guys through what literally just being in the market when there's momentum, what that would have resulted in, how few trades we would have had to do to accomplish all this. And so let's go back again, let's say 13 months, we'll go back to November of last year, where momentum came back into the market and it gave us a buy signal here on the SPY ETF. And you can see ultimately that rallied about 17%, and then it got stopped out for a trailing stop for about a 17% gain. Then we had a little short signal, and actually I need to quickly adapt this to the proper, there you go, okay. And then it reached its free profit target, which means that position where we take half the position off, and then it would have gotten stopped out for the rest for probably what would have been a flat profits trade, because it lost money on the second half, made money in the first, so flat profits. Then we had a buy signal in May of this year. Again, it reaches that free profit target very quickly and ultimately got stopped out for about a 6% gain if we track all this. Then we had a sell signal. Again, it reaches its free profit target, gets stopped out for the second half. So that's, I'm going to call that a free trade. No zero profits, so flat profits. Same thing on the next one, buy signal. And then we had a sell signal that did not reach the free profit target. So we lost about 2.5% on that. Then we had a buy signal, and I think that one was good for about a 2-3% gain. A sell signal right before the election, which just before the election, I typically wouldn't be taking a trade. So that's not one I would have taken, but that's the only one we wouldn't have taken throughout the year, as you would imagine, right before the election. And then we have a buy signal that happened right after the election. And so far, the S&P's up about, 2.8% or so. So we're talking about roughly 26 or so percent of gains. I know I didn't add this number here, over the course of 13 months by just having done, what was that, 10 or 11 trades. So that's like less than one trade a month, as opposed to, a lot of people do 10 or 11 trades per day, right? And there's nothing wrong with that. That's a different time frame. I'm just trying to show you what factually would have been done as a result in the S&P 500 if all I would have done is been in the market when there was momentum. We can do the same analogy with like NVIDIA. So you can see NVIDIA, for example, we can do the same math. Again, we would have gotten in December of last year for an 87% move before it stopped out, then a flat profits trade, then a 36% gain. Then I think this one was flat profits, 14% gain. And then of course, right before the, and then no, and then basically now we're in the chop zone. So we'd have probably lost about 6% or so. So, you can kind of add this up. So 87 plus 30. So you're talking about, plus 14. So, 110, 15% of gains, just having been in the market over the course of the past 13 months when there was momentum and like not being in it otherwise. So not a lot of trades over the course of all these, but still 120 or whatever, 50% of gains in just one stock over the course of 13 months. So I think that's, the way we look at it, that is a very respectable way of looking at the markets. And then of course, momentum is everywhere. Like it constantly changes. Like we've seen some momentum recently come into, things like these uranium stocks. So like here, for example, we're getting a buy signal, or we got a buy signal, I should say, in Cameco. The ticker symbol is CCJ. We reached that free trade target very quickly. So we were in a free trade, and then ultimately would have gotten stopped out for a gain of about 15%. We even had a second chance entry, but that's not necessary. But again, we only want to be in the market, particularly if we're directional traders, when there is movement, when there is momentum. That's really the point, and that's where we want to go in, and we want to use options. That's where we want to be long options. Again, from a directional perspective, there's lots of option strategies that we like to do as well that are more income oriented, but those are not so much focused on momentum. Those are more, in sideways markets or something like that. But as a directional trader, we really want to make sure we focus on momentum. I'm just looking at whatever, people might be typing in here, or some stocks here as well that I'm just thinking people are watching. You look at something like salesforce.com. So let's just look at the past couple of signals here. You can see we had a sell signal that reached its free target. This was back in September. Then it got stopped out for ultimately a flat trade. So we made money on the first half, lost money in the second half for a scratch. And then momentum came back into this market. We see we got a buy signal. Again, we reached that free trade target very quickly, and the trade is still on. The stock is now higher by 34% since September, and one could still be long the stock because momentum is still there. We're using this purple line as our trailing stop. And so again, the goal here is to just be in the market when there is momentum, and just not be in it when there is no momentum. It's really very straightforward as far as the concept is concerned. Now, obviously, there's some really high octane stocks out there. So I'll give you an analogy here. And like, for example, MSTR, MicroStrategy. Again, all we want to do is be in the market as a directional trader when there is momentum. And so let's look at MSTR and see if this would have made money. So 150% was that initial buy signal in February. Again, it reaches its free profit target almost immediately. The free trade target. Then it got stopped out for a gain. Notice I'm using the words gain, not loss, of 150%. Oopsie, let me get rid of that, whatever this is. Then we had a sell signal. Again, it reaches the free trade target, gets stopped out for the rest. So scratch trade. That happens again. And then we get a buy signal in. So these are all scratch trades. And we're also in the chop zone at this point. So I'll explain that later. So that's typically where we want to stay out. But anyway, and then we got a buy signal. Starts breaking out, basically, as momentum comes back in for a gain of whatever this is now. I don't know, yeah, 187 whatever percent. So roughly, we're talking about over the course of since February or whatever this was here, like 332% of gains. And that's not using options. Now, this is a crazy volatile stock. I'm not sure one really has to use options on something like this, but either way, in any way, again, the point is to try to share with you that if we just use momentum and only are in the market when there is momentum, we can really, it can go a long way. Um, let's look at something maybe more recent as well, just in the interest of time and looking, because everyone's always focused on the here right now. So here you can see, for example, Meta. So Meta got us a sell signal on the 15th of November. That did not work. It actually didn't even reach its free target. So ultimately, this trade got stopped out for a loss of 3.5%. And then we got a buy signal, and so far the stock is up about 7%. So, you know, not a massive, massive move. But again, the point is we only want to be involved when there is momentum. Of course, I can buy a call option when momentum comes back in or a call spread. But the point is we kind of need to know what's the underlying stock doing before we do an options trade, at least if we're directionally exposed, right? So that's the way we look at it. Or, you know, you look at something like United Airlines. I mean, this stock seemingly out of nowhere. And again, we don't really care what the news flow even is for the most part. And I say this as a macro investor as well. I do care about the news. But from a momentum perspective, it's really not that important. So you can see we had a buy signal come in there. Again, it reaches that free trade target. And then we're just using a trailing stop, which is in this case, the purple line on the screen. And so far, the stock is still up about 122%. So again, all we're looking to do is be involved in the market when there is momentum. That's really the only thing we're trying to do. We only want to be involved when there's momentum as a directional trader. Again, I want to be clear on that. I see some people asking for Bitcoin stuff, and we can look at it. Doesn't matter. We can look at any of this stuff. Like BITQ is, I know, something that a lot of people watch. So this was someone was asking before for that ticker. So let's just look at BITQ, for example. This is the Bitwise Crypto Industry Innovators ETF. That's a mouthful. But we got a buy signal there and reach that free trade target. And this one actually gets stopped out once, and then we have a second chance entry. So basically what we like to do in the case of something that's more volatile, like BITQ, that initial trade there would have probably made about 12%. And then basically when we go back above these lines, we get a second chance entry. So the second chance entry came in there, and it's now up about 22%. So 22 plus 12 or whatever. So make that 34, 35% of gains in this particular ticker. Yeah, so we're essentially using an initial trailing stop that is pre-calculated, and then we essentially go with predetermined moving averages on this particular example. Or yeah, like Coinbase, sure, that goes right in line. So let's look at COIN. It's another momentum stock. It looks like today it's up a touch. Let me just quickly adjust it.
Still moving.
Fausto, can you? I think you're unmuted. Just so you know.
I'm looking at. Sorry about that. I just saw stock was running. I'm sorry about that.
No, I'm just in case. Just to save you, just in case. Anyway, so Coinbase, right? Same thing. We got an entry signal there. This one actually got stopped out, and then we had a second chance entry. Again, we want to respect the moving average because some of these things can be very volatile. And you can see where it's up in like 26 or 27%. In full disclosure, I have a January call spread on right now in this name. So just in the interest of disclosure, I'm not trying to front run the stock. Obviously, I'm silly, but just as an FYI. More recently, I mean, we talked about quantum stocks. I think we alluded to it before, if I'm not totally mistaken. You look at like quantum stocks came into focus literally in October, but here in the headlines, literally about 2 days ago when Google announced that new chip. But you can see quantum, this is an ETF, so we got a buy signal. This actually did never get stopped out. It held the support line or our trailing stop. Um, Again, it reaches that free target very quickly. That's actually really important. So from a risk management perspective, I just don't like to lose money, or I certainly don't like to lose a lot of money. So I like to get to what I call a free trade target very quickly, which means I take half the position off. So I have the remainder of the position. That's essentially quote unquote a free trade where I can hardly lose any money on. So it reached that target the next day. And so this particular ETF is now up 21%, and still moving since giving us that buy signal in right after the election, by the way, November 6th, right? So we got a new momentum buy signal there. We can look at like Google, for example. So here's Google. Let's see if this would have made any money. Let's go back a little bit and see what momentum looks like here. So here we go. Okay, so let's go back a few months just so you guys can kind of see this. Again, we only want to be involved when there's momentum. So we had a momentum sell signal. Again, it reaches the free target very quickly and ultimately got stopped out for a gain of 10% to the downside. So I would have bought a put or a put spread, something like that, or short of the stock if one wants to do that. Then we got a buy signal. That one essentially got stopped out for flat profits, so not much to write home about there. Then we had a losing trade. This one down here. This was a sell signal, didn't even reach the free target and got stopped out for a loss of 6%. And then we got a buy signal. And so far, the stock is up 12, 13%. So net, these two trades are up 6, 7%. And again, I can buy a call, or if it goes on the momentum buy signals, I can buy a put on the momentum sell signals, and so on and so forth. Does that make sense? Mm-hmm. And just so you guys know, just for full disclosure, I have a different uh, screen resolution on my screen here, so I have to keep moving. Tesla. Let's have a look at Tesla. This is for Dave Meyer. Let's look at Tesla. So Tesla, Dave, the last time we got a momentum buy signal was on the 25th of October. And you can see a little green arrow. Again, it reaches the free trade target like literally the next day. Never got stopped out. Remember, see how that line holds? It's quite miraculous how that line holds, by the way. And so far, this trade since the entry point there is up 62%. So I could buy a call or a call spread. You see that, Dave? Does that make sense? Yeah. And yeah, certainly I can use leverage, right, by call spread. I typically like to go at the money. I keep, these are directional trades. It's not an income trade, it's a directional trade. By the way, I do want to quickly check in on this gold trade that we looked at earlier. It's still moving. So this is an intraday signal that we got earlier this morning in gold, a short signal. And you guys can see that we're still holding that line. So the initial free trade target was reached right there. And we are still trailing it with this purple line right there. In fact, this chart's actually lagging a little bit. Gold futures are actually down a little bit more at this because I don't have a live. It's like 15 or 20 minutes delayed on this one, but the live gold futures chart's actually right back down here right now in case anyone's being very, very careful and watching closely. But yeah, that's the latest signal there in Tesla. Do you see that, Dave? Does that help you answer the question? I mean, it doesn't have to be high octane stocks, although it can be. I mean, you look at a stock like, I don't know, something that's many people might think is a little bit more boring, like a Walmart, right? I mean, these stocks can have momentum too. I mean, Walmart's been a terrific momentum trade, and that's one of the things that I'm really making sure that I bring across to our clients um, over the remainder of this year. As we look towards 25, I think we're going to see a lot of momentum, but I don't think the momentum is going to be in the same things that had momentum this year. So you look at like Walmart again, you might say, "Oh, this is boring." Well, Walmart got us a buy signal in May for a gain of 13%, then a scratch trade. No, actually, this one would have lost some money, probably about 3% because it reached the initial profit target. And then it's been nothing but an absolute run. Look at this momentum trade. So again, buy signal in August, and it's been holding. Can you guys see that line right there, how that holds? And I mean, the stock's up like 30% since. And again, I can buy a call or a call spread or something like that. Good to hear, Dave. Glad that was helpful. We actually closed Boeing literally just today. I can show you guys this here as well. This is a momentum trade that we got into at in whatever, a week or two ago or something like that or something. And you can see we had a new momentum buy signal right there. And again, it reaches that free profit target literally the next day. That's this little green dotted line. And since there, the stock is now up, I don't know, 9 or 10%, right? So very powerful. Ah, Brian, I see you're using you're using this. Oh, cool. I can also show you, like for example, like today, I don't think there's any momentum really, but like for example, you can look like yesterday, right? So like yesterday, the Nasdaq 100. This is an intraday chart. Right out of the gate, we got a buy signal, and then we reached that free trade target. And then ultimately we got stopped out later on the day, like literally just before the close for a complete gain of about 1% ish. It's intraday, right? I could do it. I could have done this with futures. Is anyone here trade like the Nasdaq futures or the S&P futures? I can show you that if you guys want quickly. Same trade yesterday. Let me show you that one with you just so you can kind of see what that looks like. So that was yesterday morning, right after CPI, we got a momentum buy signal. Let me share that with you. So this is right after CPI, actually just before CPI. And I could have waited until for CPI to pass and then entered it. Either way, but the point is it held. Again, it reaches its free profit target very quickly, and then we kept the trade. The trade could have been kept on. Again, we're using this purple line as a trailing stop, right? And again, it's just to reiterate, all we're trying to do is be in the market when there's momentum, and when there's no momentum, just leave it be. Again, this is in the futures market, so I could have bought, a futures contract. If I could have bought call options on the futures contract, if one wants to do that. But again, very simple rule in terms of being able to follow it. It's not a complex thing to follow. Does that make sense? Yeah, so that's ES, and again, it's the same thing for all these. It doesn't really matter which which futures contract you're watching. It's really the same thing. It doesn't really matter what we're watching, right? So even the SPY yesterday morning had momentum. If you guys want to, I can quickly share this with you on the SPY in case anyone trades that. So like this is the past 2 days. So you can see we had a sell signal there. This was like late on Tuesday, and then we had a buy signal right out of the gate yesterday morning, and it just pushes higher. So again, the point is momentum. We want to use momentum. Now on the day, back on the daily charts, just to touch on a couple more things. I could have sworn someone typed in cloud stocks, but sorry, what's it called? These cyber stocks. So this is CrowdStrike. And you can see, again, all we care about is momentum. So the latest buy signal there came in September. It reaches its free profit target like almost immediately. Keep on the rest. Now, the rules that we like to operate by, sometimes, as I showed you before in some of the crypto stuff, if we get stopped out, like if we break below this purple line on a 5-minute on a daily closing basis, we get out, but we will get back in if the price goes back above both of these lines. So this first trade would have stopped out for a gain of 10%, and then they'd be right back in right there. And so far, this one's up another now 17%. So that's basically 27% worth of gains on the stock. Of course, options would have been much more since September. Is this helpful, guys? Does it make sense? Yeah, so we're using a proprietary set of moving averages. Yeah, it's kind of part of our quote unquote algorithm. We discuss it with our clientele, but it's the point here is more to show you the concept of momentum, right? That's really more. I'm trying to get people to kind of get their head around momentum. Now, I see a bunch of people are asking before. I'd like to actually give everyone access to this indicator. I know, for those people that see momentum, and I really, really, truly believe that it's an absolute must tool to have. I think every trader should have a momentum tool. So I'd like to give everyone here access to this. If you can see the value in momentum, and again, I think everyone should have a way to look at the market in multiple ways. So this is like one really crucial way. It's just like having a putter and a driver belongs into most golf bags. A momentum indicator to me is I think crucially important to use. Now, this indicator you can actually install this on multiple different platforms. I don't represent any of these platforms, so I'm not here to represent these companies, but it can be installed on TradingView, which is what I was just using here. It can be used in NinjaTrader and Thinkorswim and Metastock as well. And basically, the way you can take advantage of this is, and we can use this for day trading, right? So let me just quickly say this. I use this on day trading for 5-minute charts. I use it a lot on futures. I use it a lot on stocks. I use it a lot on ETFs. And of course, on the daily charts, it's swing trades. So I'd like to give you guys all access for a full year for 73.6%. It says here, it's called 74% off. It's just $397. And you also get a full year's access to not only uh, the indicator here, but also to actually 12 months of the trade alerts. And you get access to our what's called the 2% club, which basically means other things included here like checklists, and we have what's called the 3x triple play strategy for short-term swing trade and longer-term trades as well. So all these things are included here. So again, if you can see the value in momentum, and again, I would urge everyone to have a momentum tool, particularly as we go into 2025. We've already had momentum markets for quite a while, but I think momentum is going to shift to different parts of the market this coming year. It already kind of is a little bit if you watch closely enough. So you're going to get a full 12 months access to the trender, to the trade alerts, and it's just $397. It's the lowest price we can possibly do. It's 73.6% off. You can go to the steadytrader.com/trender to do this. And if you guys have any questions, you can call our team. They'll be happy to chat with you if you need to ask any questions. 401-203-7389. We are actually doing an onboarding session tomorrow, Sabina. So this is tomorrow is the 13th of December, if I've got this right. And we're going to be doing it live. I believe it's at 10 o'clock Eastern. So as soon as you signed up, you're going to be receiving an onboarding phone call from one of our team members personally, and you will be invited to that session tomorrow. If you can't make it, don't worry, we will record it. And then we do monthly sessions every month, right? So you'll be able to join us. I send out a Monday email with new trade ideas, with new signal updates. And again, of course, you get access to the indicator for the full year, and to the trade alerts that we send out as well. We send out a lot of trade alerts on the SPY, on some of the major ETFs and major stocks and things like that, right? Anything that's moving. So like for example, we just closed a trade on Boeing today. I showed you that chart before. But I think what's important is momentum, right? Momentum is a critical part of, I believe, any trader should have a way to look at momentum. There's a question here from Timothy. He's asking, I think momentum. Yeah. So look, again, it's a great question. So basically, Timothy, it's a long question, but it's a good question. And basically, if I just scanned it quickly, Timothy's wondering about momentum. Like, is it riskier? What it is understanding that there are different parts of the market that will be in momentum at different parts of time. So like, for example, right? When there is no momentum, you do not want to be involved as a directional trader. So we talked about quantum stocks, right? Which which these are quantum computing stock. We talked about these being back into new momentum, right? There are going to be parts of the market that are in momentum and parts of the market that are not. I think the real risk, to be honest with you, Timothy, is when things are not in momentum. And so that's kind of the point of what I'm trying to make is there are lots of strategies to use in the markets, but I think for people that want to be directionally exposed in the markets, when they lose money because there's no momentum. So I would almost flip your point around and saying there's actually more risk of if you're directionally want to expose yourself to markets, if you want to be long stocks, long calls, long puts, long futures, right? Or short futures, if you want to do directional trades, I actually think the risk is higher to not know when if there's momentum or not. Meaning if you are in a trade and there is no momentum, that's actually riskier because you're going to get chopped up. Does that make sense? It's actually an awesome question. It's a little bit like sector type thinking. Yeah. So like I'm a big, if you've done this for long enough, and I know Faust has been at this for a long time as well, but for me, it's now like 25 years. And, I look at this I'm also a manager. I'm the CEO at our investment advisory firm as well as a separate company. And so I look at the market through a lot of lenses. I talk to a lot of my hedge fund colleagues every day. And so you look at it top down, but again, momentum is really, if you want to be directionally exposing yourself to the markets, I firmly believe that it's critical to be knowing when there is momentum and when there's not momentum. So I think I'm right where I need to stop, if I'm not mistaken, Fausto. So don't want to overstay my welcome, but I sure hope this is helpful for people, and you will give it a shot in terms of momentum. Again, it's critically important, I think, as we move into 2025.
No problem, Serge. I mean, yeah, I mean, listen, um, I know you for how long have we known each other for?
I'm going to say 15 years.
15 years, 15 years. So listen, if you've been doing it for 15 years, obviously we talk about it and showing everybody, you can see the value of it. So everyone just make sure you get an opportunity, take him up on his offer. And, listen, and, he's going to be doing another event tomorrow. Like he's Michael Cow, just to introduce him, he is a legend in options trading and would be also someone I had the pleasure of meeting him recently at the Crossroads Summit in Miami, Florida, an incredible event sponsored by TradeStation. Michael Cow is one of the amazing traders, been doing this over 25 years and is a well-known experience in Wall Street. He's the co-founder and chief strategist at Option Interest Pro, where he helped traders and investors make the smartest decisions with the data, with his strategy. Plus, he's also the co-author of The Option Edge, a must-read anyone looking to master options trading strategy and volatility. You probably see Mike before. He's a regular he's on all the financial stations, like on CNBC. He's especially known at his appearance on Fast Money, where he talks about his expertise on the strategies and the market. Mike started his career back in the 90s. He's also been a floor trader, options trader, a market maker on the Philadelphia and the New York Stock Exchange. He's been part of some of the biggest game-changing innovations in options trading. He uses his cutting-edge technology where he builds one of the first systems of real-time quantitative volatility trading. He's also an advisor for Option Play. I mean, he's helped traders in every levels maximize their opportunities in the market. Mike is also well-known, experienced, has a passion to teach. And, like I do and every other trader here, and I had the opportunity to meet with him and talk to him. And I had to get him here because I thought that, been doing some of these events for over 35 years that it's just, I never had the opportunity to get to meet him. And I said, listen, Mike, could you please come here and speak to our traders? Because they don't realize sometimes that there is the community of us is over, I don't know, about 10 million. And we're like a fraction of it, but there's a lot of active traders here. And Mike, I just want to thank you for being here and look forward to getting your insights on the market. I know we spoke a lot about certain stocks that did move. And when we come back to them 3 weeks later and we're looking at it, I'm like, oh my God, they're at what price? It's like sometimes we're shocked the way they are, but love to hear your insight on. But let's give him a round of applause and welcome here, Michael Cow. Mike, I can't hear you. You're muted. No problem.
I have